close to about 60%. That's the stock currently down 1.5%. But as a part of our series 2023, my colleague Prashant also caught up with S. Naren, CIO at ICICI Pru AMC, to understand how we expect the markets to behave in 2023 and if he sees domestic inflows continuing into our markets. Listen in.
SIP flows are extremely strong, and what's different, if you ask me, at the start of 2023 is, if you go back the last 2 years, interest rates were very low.
Right.
So people said, why should I invest in debt?
Right.
But if you go back and think where we are today, interest rates are much higher.
Right.
So what you get in an overnight fund is almost 6% and higher.
Correct.
So interest rates are much higher. So people are thinking, should I allocate to debt?
Right.
And should I allocate to equity? Or should I allocate to both?
Right.
And this is a question anywhere in the world people are asking, because they're used to 13 years of zero rates everywhere in the world.
Correct.
So I think the picture is more mixed on flows.
Right.
It's not that the flows are bad.
Correct.
Flows are still good.
Correct.
The SIP flows are outstanding.
But some of that equity flow is also going into debt instruments, etc.
Yeah, I think the non-SIP flows are likely to go partially to debt, because debt has become an outstanding asset class.
Is that what is happening in the last 2 months, the mutual fund data that we get, right? The SIP number is at all-time high, but the discretionary, non-SIP number actually is not looking good, right?
It's logical. It's logical that people will also consider debt, because if you're going to get much better returns on debt than you were getting 2 years back or 1 year back, why wouldn't people consider debt?
But it is going into financial products. I mean, it's not as if that money is not coming into...
Yes.
It's getting invested, not in equity, but in...
Yes,
in
clearly. If you look at the last month, what we saw was that debt index fund
Right.
have received huge inflows, and
Right.
that's something which possibly as a product didn't exist 2 years back. So I think clearly we are seeing a situation that people will consider debt and SIP,
Right.
both,
Right.
and that will be the change which we will see in 2023.
Okay, I always, you've always been actually one of the very few true value investors. You're very contrarian as well, and to be contrarian while managing such a large amount of money, to take those calls and make them public, I mean, I think it takes a lot of courage and conviction. So what's the big call for 2023? Is there a big call, Naren? Or as you said, it's more mixed and muddled as we start the year?
No, I think the big call will be that inflation will become much smaller as an issue in 2023.
Okay.
And therefore, we are in a situation where multi-assets become very interesting, that you consider all the asset classes. You consider a product like multi-asset, which can invest in debt, equity, gold, silver, REIT, InvIT. You can do everything.
Right.
Because I think that kind of an asset will become much, much more interesting, because you're still going to have a volatile year ahead.
Right.
Because growth in every part of the world is going to slow down.
Right.
You're not going to see a situation where maybe inflation will become less of a problem. Doesn't mean interest rates fall.
Right.
Interest rates will stop going up.
Right.
They'll stabilize.
Right.
Whether they're going to crash, I don't think so.
Large caps versus the rest of the caps, mid caps, small caps. You like large caps because they offer valuation comfort, I believe, right?
See, basically what has happened this year is the bulk of the selling. See, you know, once you have selling, market corrects, then valuations become cheap. Let's look at where there was selling this year.
Right.
It happened by FIS.
Right.
Where did the FIS sell? They sold in large caps.
Right.
So large caps became the area where bulk of the selling has happened this year. So large caps became the area where valuation comfort is there to a higher extent.
Okay.
Mid cap and small cap, the mutual fund industry ensured that there was continuous SIPs.
Right.
So that area has seen virtually no selling.
Right.
So those areas, the valuations are not cheap.
You're also in the past famous for calling out a segment which is looking frothy. Is it looking frothy, mid caps and small caps?
They're looking clearly costlier than large caps.
Okay.
Because see, you need some wave of selling for the valuations to correct.
Okay.
And there has been no wave of selling for years now.
Right.
So, and retail was also positive.
Right.
So that's not an area where we have seen any selling.
Right.
Once you see selling, the sector's valuations correct.
Right.
So that's why we prefer large caps over mid caps and small caps. We also like flexi caps.
Right.
Because what happens in flexi caps is at some point of time when you want to invest in mid and small, because mid and small are structural areas.
Correct.
So at that point of time, you can actually buy mid and small cap also.
Right. Right.
That's how we look at it.
And one area in the large cap space which has corrected a lot, we spoke about it earlier as well, is IT services, right?
Yeah.
One big sector which is down significantly still. You still like that?
See, our view is very simple. Both the export-oriented sectors, whether it is IT and pharma, both have done very badly in the last 1 year. If you look thematically, those are the two sectors which have done very badly. We think that both these sectors are worth systematically investing over the next 1 year, because there is possibility of global recession. So you invest into the recession, you normally make money. Just like, people who invested in banking into all the banking problems
made
they
a
lot of money.
Yeah.
Something similar.
So buy a IT fund or?
Yeah, you can buy even an exports fund which covers both.
Right.
Or you can buy a separate IT fund, technology fund, separate healthcare fund.
The other area which has seen a frenzied move is this entire PSU bank space. So I want to start there and then come to private banks. Any interest, any idea whether this could continue, in your opinion?
See, it's a very tough call. We were some of the people who actually, in many of the funds which I run, we made a lot of money out of PSUs. Most of the time when we invested, people asked us, will you ever make money in PSU stocks?
Yeah.
After they have run up, when people ask me this question, I don't know how to answer them, because tactically they look very good.
Right.
But you should ask, in 2020, the number of questions we were asked.
Why are you buying?
Why do you have PSU as your top holding?
Right.
Even today, where I have a PSU as my top holding in some of my stock funds that I run, top holding. And most of the time, including some of the younger people in my company, they ask me, how can you have a PSU as a top holding in your stock?
Right.
And they've all done so well.
Right.
And I have to answer my younger colleagues in my company, I have to answer distributors, I have to answer investors. And when they do well, people ask me, will they continue to do well?
You mentioned briefly metals, right? When you last on, you said, don't buy producers, but buy consumers.
Yeah.
Is that still the way you look at it, or is it reverse now?
See, metals have corrected a lot. And if there's a good, big China reopening, it becomes a tactical trade after the correction.
But that could be now, right?
It could be now. So structurally, I think tactically, it's an interesting sector to look at.
Okay. Steel, non-steel, the entire...
Both
Right.
actually. And unlike 6 to 9 months back, there's no frenzy in the sector. No one talks about it.
Correct.
So that's how we look at it.
Naren, any other themes that you want to look at, any kind of idea, consumer users versus producers, anything like that, which you'd like or avoid?
No, to summarize, what I would like to say is that people should believe that mutual funds also are a vehicle to invest in debt. They should continue to practice asset allocation. Anyone who practiced asset allocation benefited in 2023 and 22. They will continue to benefit in 2023 by doing either multi-asset or asset allocation. And do logical investing. Don't get carried away in euphoria. And I believe that it is not yet time to actually press the accelerator and take big risks. That time will come. And when that time comes, and if we get it right, we didn't get it right in June, but if we get it right, we will tell you. In March 2020 and April 2020, we were very clear and we did communicate. But in June 2022, we were not that clear. But we still believe we are in that middle of the road path. And that's what we think we are in. But Indian macro has been beautifully handled.
Yeah.
India is a fantastic structural story. But against that, we have record valuations.
Great market, but great valuations as well. That's S. Naren, CIO of ICICI Pru AMC, saying in that last line, not time to press the accelerator and take big risks. And that time will come sometime maybe in 2023, but a more middle of the road kind of view coming in from S. Naren of ICICI Pru as we look into the next year. We'll take a quick break here. Up next, Mitesh will be with us for some technical trading ideas. The market, by the way, is seeing the second dip. The first one got completely bought. The Nifty came back into the green. We're down about 50 points now, 18,371 on the index.